Hello guys and welcome again to my channel. So let's continue our lesson. So I have my laptop right here. So we are, this is actually the fourth video that I have taped for merchandising, I guess. Fourth or fifth, I'm not sure. Just check on the playlist for these videos. So first off, in the last episode, the last two episodes basically, we have had our illustrative problem right here. This is part of the illustrative problem. And then there are transactions for December 20x5 and also the transactions that are for adjustments. Now, we analyzed that problem and we came up with journal entries. Regular journal entries and adjusting journal entries, even though the adjusting journal entries is just needed on the step 5, the completion of the worksheet, as well as the step 7, adjusting journal entries are journalized, adjusting entries are journalized and posted to the ledger. So we have done that, the regular journal entries or the general journal entries as well as the adjusting journal entries, so that the analyzing phase will be finished. And after that one, the regular or the general journal entries were posted to this ledger. And again, I apologize that the penmanship are smaller because we have to economize space so that we will be able to see the whole picture at least, or the majority of the picture. Like for example, in these entries, we have to see them so that we can post. So that's the reason why we need to economize the space. Okay? So let's go to the next step because effectively we are already at the step 3 of the accounting cycle for merchandising entities. Okay? So let's go to step 4. Step 4 is all about preparation of the unadjusted trial balance. So basically, you just have to list the balances of these accounts. Okay, so let's do that. First, let's erase the remaining part of the problem. This one. And let's put on the accounts. I have not written the unadjusted trial balance first so that you will see the process, the whole process. And you can also join me. You have your own paper there. Let's make the unadjusted trial balance. So, we'll start with, is it dry? Is it, it is. It's dry already. So, we'll list the accounts. Again, the listing of the accounts is coming from assets, coming from current assets and then non-current assets and then current liabilities and then non-current liabilities and then equity and then revenues, in this case sales, and sales discounts and allowances should also be next. And we have the expenses, the cost of sales first and then the operating expenses. So how do we do that? So we'll start with an adjusted trial balance. So let's start with cash. Of course, the cash has always been the first in the listing. And then, forgive me again, I have to economize the space. I don't know if that will fit. Maybe I'll give it more space. Um, Debit and then credit here. Now, we have cash at first. The cash is 763,450. Procedural. And then Next is the accounts receivable. 387,000. Next is, what's next? Next is supplies, I guess. Let's have the merchandise inventory first. The merchandise inventory is 426,000. Let's add some. Let's have supplies next. The unadjusted balance for supplies is 31,000. Next is we have insurance advances. Okay? The insurance advances is 48,000. What's next? Supposedly, it's not the land. What's OB? I did not remember what is this OB. Um, this is equipment. Can I check first? What's OB? I guess this is building. I guess. I'm, I'm not really sure, but there should be a building, I guess. Yeah, office, building. Supposedly, this should not be. If we're going to follow the proper chronological order for account titles, we have to first list the equipment. The equipment is 800,000. However, this equipment has a contra asset, accumulated depreciation equipment. Let's put that first. The accumulated depreciation equipment is 200,000. So let's put one smiley face here, and then smiley face also here. And let's go to the office building. Office building. The office building is at 900,000. However, there is an accumulated depreciation for such building. How much? According to here, 250,000 credit. So we're done for this one, and we're done also for this one. And lastly, we have land. So the land is valued 370,000. Here. Next, since the assets are already done, let's go to the liabilities. So we have first the accounts payable. The accounts payable is 277,000. And then we have the loans payable. We have 1,200,000. So this is done. This is done. After the liabilities, I guess that's the only liabilities that we have. Let's go to let's equity or capital. Let's equity is 1,320,000. Of course, the next for the equity is the Glet's drawings, which is on the debit side. The Glet's drawings is 20,000. And then, this is done. Let's go to the sales already. The sales, I guess. So, we'll start with the gross sales. The sales is on credit side. The sales is 782,000. So this is it. How about its contra sales accounts? We have sales discount. On the debit side, we have 5,400, and the sales returns and allowances. Do we have that? So this is done. Sales returns and allowances is 43,000. And there you go. We're already through with sales. Now let's go to the cost of sales related accounts. So first off, we have purchases. Yeah. The purchases is 212,000. Okay. So this is done. This is also done. Aside from the purchases, we have purchase discounts and purchase returns and allowances here. So purchase discount first. The purchase discount is on the credit side. That's 2,300. And the purchase returns and allowances. Purchase returns and allowances. Where is it? Here. That's 12,000. And another one is the freight in. Where did we put the freight in? Of course, it's on the debit side here. So, which is why it's very important that you grouped the accounts based on their normal balances. The assets and the expenses are supposedly grouped together, and then the liabilities, the equity, and the revenue accounts should be grouped together also. So, freight in is again, where is that freight in? It's 2,000. It's debit. Okay, so this is done. This is also done. And this is also done. So what are the things that we need to consider? Everything is done here. We still have first the sales discount is 15. Oh no. The sales discount should have been, there are two sales discount. I guess we have to find the first sales discount. Sales discount is 5.4 here, and the other sales discount is 5.5. This 5-4 should have been grouped here. So there should be 5-4 here. Well, this should be erased, actually. So that's one of the wrongs that I committed. But even so, they are balanced. We just did not combine the 5-4 with the 550 and the 99. So supposedly, the sales discount is not 5-4, it's 5-4 plus 5550 plus 99. Yeah, 20,850. So this will become 20,850 debit. So I'm solving it for you raw so that you will see the whole process without editing and without perfection as if. Because when you solve really in the paper some comprehensive problems, it's impossible that you will get it perfectly immediately. Let me check if it's still recording. Yep, it's still recording. So this is not right. It should have been 20,850. Let's check if ever this is still balanced later on. So this is done. Next is we have representation expense. The representation expense is 9,000. Yeah, it's done. What are the other accounts that were not? Yep, we have insurance expense, insurance expense. uh, I guess it's not insurance. It's interest. Interest expense. Interest expense is 8,000. Yep, it's done. And then we have freight out. Everything else has been accounted for except for freight out. Freight out is 3,000. Now, supposedly, what we're gonna do right now, because we have already accounted for everything here in the T account, including the credits, all the credits here, and the debits. I'm not sure. Let's check. Supposedly, we are going to add all the debits and add all the credits and see if ever they are balanced. Okay? However, let me tell you this. Since you have already made adjusting entries for the transactions for adjustments, you have to record already here, even though the balances are still zero, the accounts that are not yet considered here in these D accounts. Like for example, we do not have any insurance expense yet. So you have to put it right here so that it will have a space already. Because actually, the unadjusted trial balance is just the first part of the worksheet. So meaning, on the next parts of the worksheet, these adjustments are also necessary. So you put on the account titles that are here that are not yet considered here for ease of making the worksheet. Okay? So we have the insurance expense, but right now, there is no balance yet. And then insurance advances, we already have the insurance advances. And then we have depreciation expense. Let's put on depreciation expense. And then the supplies expense. Although again, they are still zero. We have salaries expense. And this is very important. Aside from the supplies, salaries, expenses, and others, I would put on merchandise, inventory beginning on the income statement, and merchandise inventory end. This is important later on in our discussion. Both are in the IS, income statement. And sometimes we can put here miscellaneous expense, but during this particular problem, since we already considered all the regular transactions here and the adjustments, we are sure that there are no miscellaneous expenses. Okay? Now, the next thing that you should do is again to check if ever the debits and the credits are actually balanced. So, we start with 763,450 plus 387,000 for the accounts receivable plus 426,000 plus 31,000 plus 48,000 plus 800,000 plus 900,000 plus 370,000 plus 20,000 plus 20,850 plus 43,000 plus 212,000 plus 2,000 plus 9,000 plus 8,000 equals plus the last 3,000, 4,043,300. 4,043,300. So that is the unadjusted trial balances for the debits. So you can put here totals, double rule. And then on the credits, let's check. 200,000 plus 250,000 plus 277,000 plus 1,200,000 plus 1,320,000 plus 782,000 plus 23 plus 12,000 equals, again, it's 4,043,300. So what does this mean? That means that you have perfectly posted the journal entries here, and that you've made journal entries that are balanced on the debits and the credits, because if purchases and accounts payable credit is not balanced, of course, the accounts will not be balanced also, right? So that's what it proves. Your journal entries has a debit and credits that match, and then the posting on your T accounts has been correct. What has been debited should have been debited. What should be credited are credited. Okay? However, having a trial balance does not mean that you are correct in your analysis. It just means your journal entries are balanced and you posted it right in the ledger. So, any missing entries, for example, you have not considered this freight out accounts receivable, the trial balance will still be balanced. Okay? Or duplication of entries. You have entered this twice. The trial balance will still be balanced as long as the journal entries that you have made has a debit and credits that balance and you posted it right, the trial balance will be correct. You understand? So, that's it for the unadjusted trial balance. Now, let's go to the next step immediately. The completion of the worksheet. So this is very important and you have to pay attention. Okay? So since we already finished posting, I guess it's safe to erase the accounts already. And lastly, before we erase, the groupings of the account titles based on their normal balances, the debits and the credits, will really help you in posting because it will condition your mind that sales returns and allowances should be posted normally at the debit side. Okay? Because if you mix them up, then you will not be able to see if ever you have wrong postings. It will really help. Aside from that, it will really help if ever, before making the trial balance, you get the balances of the accounts with normal balances of debits and the accounts with normal balances of credits. So that there will be no erasures in making the unadjusted trial balance later on. Okay? So that's it for the posting and the making of the unadjusted trial balance. Let me erase this. Oh no. So in the completion of worksheet, the first two columns is actually for the unadjusted trial balance. Okay? So since our trial balance here has 10 columns, we'll go to the third and the fourth. The third and the fourth is for the adjustments. And luckily, we have had our entries here. So what do we need is just to post it right here. However, in posting the adjustments, there are two methods. Number one, the first method is that we will not be using this adjusting entry number 5 about the merchandise inventory ending. We're going to ignore that one because a lot of authors will not make any adjustments yet for this one in the worksheet. I'll illustrate later what are they doing instead of making an entry like this. Okay? So they have their alternative. Many prominent authors have that alternative. So again, the first that we're gonna do in the posting of the adjustment, there are two options. The first option that we are going to follow through until the end of the worksheet is that we have to ignore this first. We're going to post only the adjustments 1 to 4. We have to ignore this number 5 related to the adjustment for merchandise inventory. Okay? So this is the option 1. First, we have to record insurance expense. So where is that insurance expense? So we have prepared this earlier. So we can put already the insurance expense at 2,000. Yep, a little farther. And then the insurance advances, we have to credit 2,000. That's it. So this is already posted. Supposedly, we start at number 1. But it's okay. We have salaries expense, supposedly in number 1. So salaries expense, how much is the salaries expense? That's 73,000. See, we have forgotten something. Instead of accounts payable and then loans payable, we should have salaries payable. So let's just erase the loans payable first. Loans payable is, I guess, 1.2. So let's have the salaries payable here next to accounts payable. And let's put on here credit 73,000. And then let's write again the loans payable of 1.2. Yeah, I guess that's it. I don't know if the, let me check. Is it 1.2? I guess it is. Let me check. 200. I forgot. Yeah, it's 1.2. So that's it for adjusting entry number 1 and 2. Let's go to adjusting entry number 3. We have depreciation expense. So 7,500. But the accumulated depreciation for the building is 3,000, and the accumulated depreciation for equipment is 4,500. So that's what you do. Instead of posting this to the ledger or T accounts, you first post this in the making of the worksheet, actually. Okay, this is done. We have number 4, supplies expense. So where is the supplies expense? We have here the supplies expense. The supplies expense is 24,000, and you have to credit the supplies by 24,000 also. But then again, we are still at option 1, so we're going to stop posting until the adjusting entry number 4. We are not yet to post this transaction number 5 related to ending inventories. Okay? So let's carry on. When posting adjusting entries, of course, the debits and the credits should also be balanced. Like for example, on the debits, we have 2,000 plus 7,500 plus 24,000 plus 73,000. And we're gonna get 106,500. 24,000 plus 2,000 plus 4,500 plus 3,000 plus 73,000. 106,500. So this is already the adjustments columns, the third and fourth columns of the worksheet. Again, at option 1, ignoring the adjusting entry for the inventories. Okay? Let's go to the, so these columns are considered adjustments. The fifth and the sixth columns is all about the adjusted trial balance. So we have the unadjusted trial balance. You just have to merge it with the adjustments and you're gonna get the adjusted trial balance. The same principle in the service entities that we have tackled in the last videos, in the previous videos. So what will happen is that if ever there are no adjustments in a particular account like the cash, you just have to copy it. So since it's in the debit, you copy it in the debit also. The same with this accounts receivable, 387. And then we have 426. This is the part that I don't like in this first option. Why? Because supposedly, if we talk about adjusted trial balance already, then that means everything has been adjusted. So the adjustments are already there. However, as you can see, the merchandise inventory is still 426,000. That's what I don't like with this one, but I would still go on so that you will see. So the merchandise inventory problem here is still it's 426,000 when in fact it should have already been 453,000 if we wanted to have an updated balance of the merchandise inventory, which is why again I don't like this first option. But again, I will go through it because it's in the books. Okay? So I'll put asterisk here to remind you that this is not yet adjusted. Unlike the supplies. See? According to the problem, the supplies is only 7,000 left. So here, we have a debit of 31,000, but there is an adjustment of 24,000 credit. Since they are opposing debit here and credit here, you have to get the difference. 31,000 minus 24,000. We have 7,000. This 7,000 is already the updated supplies, right? So they are very different. But then again, we will have the option to later on, which is we're going to have an entry for this. So you have 7,000 and the insurance advances, you start with a debit of 48,000, but since there is a credit of 2,000 minus 2,000, you are left with 46,000. And the equipment, it's still 800,000. And the accumulated depreciation equipment, both are credits, by the way. So you have to add them, get their sum. So this will become 204,500. And then the office building will still be 900 here. You just copy it. And then we have 253,000. And then the land, we still have 370,000. And the accounts payable is 277,000. Yeah? And then the salaries payable, there is no balance in the unadjusted trial balance, but we have an adjustment of credit copy. The adjustment at 73,000. And then the loans payable remain the same at 1.2. And the Gletz's equity is still at 1,320,000. And the Gletz drawings, we have 20,000. And the sales, you put here at 782,000. And we have 20,850 debit for the sales discount. Oh no, the alignment is messed up. Okay, and the sales returns and allowances, we have 43,000. We have purchases, 212,000. We have purchase discounts, 2,300. And then purchase returns and allowances, 12,000. And then the freight in, 2,000. And then the representation expense, you have 9,000. And then the interest expense, we have 8,000. And then the freight out or the transportation out, we have 3,000. And then we have insurance expense, 2,000 in the debits of the adjustments. And then we have the depreciation expense of 7,500. And then we have the supplies expense of 24,000. And then we have salaries expense of 73,000. Okay, that's it. Everything has already been adjusted except for the 426,000. But nevertheless, since the unadjusted trial balance started with a balance amounts, balance totals, the adjustments has also balance total. Supposedly, this adjusted trial balance, when you combine both, should also be balanced. Okay? So, let's see. 763, 450 plus 387,000 plus 426,000 plus 7,000 plus 46,000 plus 800,000 plus 900,000 plus 370,000 plus 20,000 plus 20,850 plus 43,000 plus 212,000 plus 2,000 plus 9,000 plus 8,000, yeah, equals for plus 8,000. So we are here 8,000 plus 3,000 plus 2,000 plus 7,500 plus 24,000 plus 73,000. I hope I got it right. You have to have presence of mind so that you will not skip any value. So 4,123,800. How about here? We have 204,500 plus 2, again 204,500 plus 253,000 plus 277,000 plus 73,000 plus 1,200,000 plus 1,320,000 plus 782,000 plus 23 plus 12. Yeah, you got it. 4,123,800. That's it for the fifth and sixth. So what will happen? The question is what will happen to this transaction number 5? You will see it now in the income statement and the balance sheet. Okay? Because the seventh and the eighth is all about the debit and credit for, what do you call this? Income statement, or now known as statement of comprehensive income. Okay? And the last one is for the balance sheet. So income statement are just the revenues and the expenses. That means coming from the sales until here. So the balance sheet is of course those that are not included. So let's drawings up. Those are for the balance sheet. Because on the income statement, we just really consider the temporary accounts, the revenue and the expenses. Okay? So let's erase this to give way for our last four columns. Yeah. Except for transaction 5, we will erase supposedly everything. So let's go to the income statement. Again, it's very important that your chart of accounts are arranged into assets, liabilities, equity, revenue, and expenses so that you'll be able to determine immediately what are to be forwarded on the income statement and what are to be forwarded to the balance sheet. If you are going to mix all the account titles, you're not going to arrange it. It will be very difficult. Okay? So let's first start with the income statement. Debit, credit, another one debit, and then credit. So income statement and statement of financial position here or balance sheet. Okay? So you can first start with the income statement. You have the credit 782, a little more, 782,000. And then we have sales discount at the debit side, 20,850. And then the sales returns, debit still, 43,000. And then the purchases on the debit, 212,000. And the purchase discount is on the credit side, 2,300. And this one is 12,000. And since you're confident that all of those from sales to downward are for the income statement, you just have to copy. Faster. 9,000, 8,000, 3,000, 2,000, 7,500, 24,000, 73. The same with the service entities. However, there's a twist. Why? Supposedly, after this, we're gonna go with the statement of financial position. We just have to get the totals. But I tell you, at this point, you will not get the correct income because you are not going to get also the correct cost of sales. What's missing? This, this adjusting entry. The merchandise inventory beginning, the merchandise inventory end is needed to get the proper cost of sales, and the proper cost of sales is also needed to get the proper net income. So what do we do? Here's the unique part in the worksheet of merchandising entities. First off, you go to the merchandise inventory. So this is the beginning balance, 426. You have to copy it. Although it is an asset, you have to copy the balance, 426. That's the merchandise inventory beginning. So as if you are entering this entry, merchandise inventory beginning, 426,000 debit. Okay? So this has been entered already in the income statement. Next, you have to put on the credit the ending balance. So you have the 453. That's the current balance or the current ending balance. So as if you are already putting this adjusting entry, merchandise inventory end in the IS 453. See? So that's a bit weird because we're talking about income statement columns, and merchandise inventory is not actually an income statement account. It's an asset account. So meaning the merchandise inventory should be on the balance sheet, right? But here we go. This is an exception. the merchandise inventory is not just on the statement of financial position or balance sheet. It's also included on the income statement, both the beginning inventory and the ending inventory, in order to get the proper cost of sales and in order to get the proper net income later on. Okay? Now, don't worry because the merchandise inventory is still here in the statement of financial position, which is automatically 453. So as you can see, from 426, you immediately erase the 426 and change it to its proper ending balance, 453. So those are the weird entries. And basically, when you do this from 426 to 453, you are entering this in the adjusting entry. Merchandise inventory, you add 27,000 here. Based on this, so as a 426 plus 27, 453. So this adjusting entry has only been recognized in the income statement columns and the statement of financial position, not in the adjustments. Okay, so that's what the prominent authors are doing. So that's it. So that's the twist. These three here are the twist. You have to put the 426,000, the beginning inventory balance, in the debits of the income statement, even though merchandise inventory is supposedly an asset account. And you put also on the credit the current ending balance. And aside from putting it in the income statement, you put that also on the debit of the statement of financial position. So that's the weird part. So let me highlight the weird part. Okay? Next, you have to add the debits and the credits, including those. So you'll start with 426,000 plus 20,850 plus 43,000 plus 212,000 plus 2,000 plus 9,000 plus 8,000 plus 3,000 plus 2,000 plus 75 plus 24,000 plus 73,000. So you have all the debits at 830,315. So you don't expect that the credits will also equal to 830,350. It's because we only considered sales and expenses here in the income statement and the merchandise inventory. The other accounts were transported in the statement of financial position, so it will not really be balanced. Okay? So again, let's go to the credits. So 453,000 plus 782,000 plus 23 plus 12,000. We have 1, 2, 4, 9, 300. Again, 453 plus 782 plus 23 plus 12,000. It's 1,249,300. So what does this mean? The debit side is lacking, or the expenses. We call this expenses. We call this revenues immediately in our minds. So that means the credits are still greater, so the revenues are still greater than the expenses. So there will be a result of 1,249,300 minus 830,350. We have 418,950. This is to be considered as the net income. So if you add the deficiency, you will have a balance of 1,249,300, 1,249,300. Okay? Now, how about in the statement of financial position? Whatever it is that were not moved forward in this income statement columns, you move it to the statement of financial position. Like for example, the 763,450 for cash. You just have to move it. And you put also the 387,000. I'll just, what do you call this? I'll just squeeze it in. And then you have 7,000 for the supplies. And you have 46,000 here. I'm so sorry. It's not really good looking. It's not really looking good right here. It's because of this tray that I wanted to emphasize. And we have 800,000. We have 200 for 500. We have 900,000. We have 253,000. We have 370,000. You have 277,000. You have 73. And then 1,200,000. And we have 1,320. And the drawings of 20,000 should be on the debit side. So you have to total them also, and you should not expect that they will be balanced. So there should be a deficiency also of 418,950. But on the opposite side. So if the deficiency here is on the debit side, supposedly the deficiency here on the statement of financial position is on the credit side. And now let's check if ever that's true. 763, 450, plus 387,000, plus 453,000, 453,000 plus 7,000, plus 46,000, plus 800,000, plus 900,000, plus 370,000, plus 20,000 equals 3,746, 450. How about the other one? You have 204,500 plus 253,000 plus 277,000 plus 73,000 plus 1,200,000 plus 1,320,000. We have 3,327,500. Let's check if ever, since this is deficient, let's check if ever the difference is actually 418,950 still. So 3,746, 450 minus 3,327,500. We have 418,950 also on the credit side. So you will have 3,746, 450. 3,746, 450. Okay? So that's the worksheet for option 1. And let me remind you that I don't like this option, but I have taught you this because you can read this in the books. I don't like this because in the adjusted trial balance, the merchandise inventory is actually not adjusted. So, what do I like? What I like, supposedly, is to post this on the adjustments. But instead of putting it here in the merchandise inventory, I'm going to make other accounts, merchandise inventory beginning for the income statement and merchandise inventory ending on the income statement as if they are separate accounts. So here's what will happen. Let's put on blue. I don't have any blue. Here we go. So if we post that, it will be 426 here, 426,000. Option 2. This is already option 2. And then the credit is 453. Of course, that will not be balanced. That's the time that I'm going to put something here on the merchandise inventory, which is 27,000. So it's now balanced based on this particular adjusting entry. So what will happen? What will happen is that instead of having 426 here, it will become 453. 426 plus 27. It will immediately become 453,000. Okay? And what will happen next, since the adjustments are already there, and there is already 453 here, um, this will be changed from 106,500. 106,500. This will be added, the 400 plus 426,000 plus the 27,000 that was added. We will have 559,500. That is also true for here. Let's check. 24,000 again plus 2,000 plus 45 plus 3,000 plus 73,000 plus 453,000. 559,500 under option 2. Option number 2. And then since this was changed, this will also be changed. Instead of that, this will be forwarded 426,000, and then this will become 453,000 here. It will all be forwarded. Okay? So basically, you just have to add the 4,123,800, 4,123,800 here by 453,000. Why? Because you just added 453,000 on the credits. And although you have added only 426,000 here, you have added 27 here, which is still 453. So in order to shortcut, the totals will become 423,800 plus 453,000. It will just become 4,576,800. 4,576,800. It's still balanced. And again, the advantage is everything in the adjusted trial balance is actually adjusted balances, including the merchandise inventory. Okay? Now, what will happen next? This will not be here. These two. The 453 will be copied here immediately. Those two, instead of being in this, will be here. Merchandise inventory beginning, 426,000. And credit, 453,000. So from here, they are just transferred here. So they will still have the same balances, the same net income, and also the same on the statement of financial position. Okay? I guess, for me, this option number 2 is much more, I don't know, much Much better. Because again, in the adjusted trial balance, the ending inventory is immediately the adjusted or the current balance already. Okay? So let me end my discussion for this video. So we have finished the preparation of the unadjusted trial balance and the worksheet. Both option 1 and option 2. So let's go to the preparation of financial statements on the next meeting. Okay? So thank you for watching and see you on my next one.